I am John Ransom, the Great and Powerful. This is Ransom Notes, powered by TownHallFinance.com and the Wall Street Business Network. Pleased, as always, to have our friend David Williams from Williams Edge join us. And no more pleased than today, where some pseudo-currency gold and the regular currency dollar are making a little bit of movement.
Well, they sure are. And, John, thanks for having me on the program today. We are very interested in some of the movements today. We do have the Fed interest rate announcement coming up tomorrow, which this is probably, I think it would be fair to say, that this is going to be the most important Fed announcement in the last 9 years, because we have had no Fed interest rate increases in 9 years. Isn't it amazing that it's been 9 years since we've had an interest rate hike by the Fed? And tomorrow it's likely that we are going to have an interest rate hike by the Fed. And if that is the case, so be it. It's going to, markets are moving to position themselves for that, and we've taken advantage in our work of that. And one such advantage, I know the people that are in our webinar, which any of your listeners can come and check us out while we're on the program with you. We have a live webinar, and slightly for another 10, 15 minutes afterwards, it goes on as well. But back on the Monday, September 7th, and I want to show the report that we put out. This is the report, and you can see it was put out on 9/7, which was Monday, the holiday, the Labor Day holiday. The next important daily bottom in December gold is expected Thursday, September 10th, plus or minus a day. An important tradable multi-day advance of 26 points is expected off this bottom. Okay, well, check this out. Here is that day that we forecasted. This is what the market would look like on that day. And the market did indeed go down and bottom. The date was September 10th, plus or minus a day. It actually bottomed on September 11th, which was Friday. And we're forecasting a move of 26 points off of that low. That low was 1097.70. If you add 26 points to that, that brings you to 1123.70, which is today's high.
Right. And that's the specificity that we're looking at with these types of forecasts. And again, we've talked about this before, David. Oftentimes news is a reflection of the technicals. Sometimes the technicals are a reflection of the news. You don't care. You just go where the data points you.
We do, and we do care about the news. Like, as an example, tomorrow, it's very important. This is a tremendously important line in the sand type of report. If they do raise the interest rate, it's almost meaningless on one level, because it's just going to be an eighth or a quarter of a point, and it will make a difference, but it's really not that as so much as the slippery slope that it is, that the interest rates have been risen and has been raised, and we're probably going to see that's the turning point for the bond market. We're not going to have the great super low interest rates, and we slowly start building up to more natural levels for the interest rates. So it's very important. Right. We look to that, though. We're cautious of that, and we often won't trade in front of that report. We do have long positions in the S&P and have had those since the daily close above 1950. We believe the S&P is still going higher. But 15 minutes prior to that report, we're going to be flat in our positions so that we don't have to suffer any of the spikes and so on that would normally happen in a big Fed announcement.
Let's talk a little bit about the dollar then.
Okay, we did have a quick little move in the dollar. I don't have the numbers up in front of me. I sort of messed my charts up here a little bit.
That's
but
okay.
That we were looking for the dollar to get up to, I forgot what the number was, but it was, Jerry might have it with him somewhere, who's on with us. But we had the advance. The dollar did get up there and did complete, and we're very happy to see that. I think it might have been about $96. I think that's what we're looking for in the dollar, if I'm not mistaken. Just a quick 1 or 2 day advance. And they did do that, and that sets up either another dollar or euro trade. And I want to remind everybody that our work is designed so that a trader can understand what, when, where, and how. The whole business is laid out in front of you. When we think the market's going to bottom, what price we think it's going to run to from there, and when it's going to get to that price, so that you can take real advantage of that rather than getting very generalized information, which might be and probably is in most cases much more difficult to trade accurately. So
that's right.
That's what we're really offering.
Get all the information that you guys need for the next market movement advance. You go to pagetrader.com. That's pagetrader.com. Sign up for their 2-week free trial. You're going to get probably half a dozen to a dozen trades. David Williams, you can also call him at 888-231-4702. That's 888-231-4702, or look him up on pagetrader.com. Thanks again, David. Appreciate all of your hard work.
Me too. I appreciate yours as well. We'll see you here tomorrow.
Okay.
Thanks.
See you, bye.
Well, good morning, everyone. I think it's pretty obvious at this point. My name's David Williams, so we don't have to go over that. I have Jerry Fagnant with us today. Jerry is a 30-year veteran of the markets, been in heavily into crude, heavily into the S&P, trades actively in these markets, and thankfully for us helps us with helping our customers take these forecasts and utilize them. Jerry, are you there with us today?
I am here today, David.
Well, good. I don't know if you had anything you wanted to bring up about any of these markets. If you do, bring it on.
Yeah, I guess what I would say first of all is we just as you just indicated, the gold trade was just 100% to the tick.
Yes.
Absolutely spot, just
it's a little
freakishly spot on. And
right.
Unfortunately, we had a number of our traders in that trade, and many I've been communicating with over the last several days, as we've been anticipating this move up. And I would say that not only did you have or did we have the indication that you just brought up in the report for the 26-point advance. But we also discussed on really a number of occasions, at least you and I did, that it would be when it started to advance, it would be a fairly rapid advance. And you can see that, boy, once it started this morning, they
just popped them right up.
They just popped them right up.
Yeah.
And so that was beautiful. And again, happy to say that we've helped a number of traders stay in and execute that trade, take something off at these prices here. And now looking hopefully for and this may be a pullback. We're at an interesting level here at the 1118, maybe testing 1116 area, because I know that we've got while it's a separate trade indication for the higher prices later this week and into next week as well. So anxious to stay in with some partial position for those higher prices.
Yeah. Well, that's very good. I'm very delighted that we had some people in on this for the gold move up. That's a really beautiful move. And I do want to tell everyone that, as I was saying on the radio a few minutes ago, that we do think that higher prices are likely coming, and substantially higher prices are likely coming in the gold. And I would want to be careful. We're going to be careful with that information, meaning that we're waiting for another place now that this trade has basically completed, the trade that we put out on the September 4th for the bottom in the advance. That has basically completed, and we now want to sort of convert that into the longer term, or at least some of us are going to convert that into the longer term, where you could literally possibly pick up a move of, well, I won't give out the dollar amount because I don't want to, give out the number here because we have paying subscribers and so on. But, it could be really substantial. And we're looking to watch gold. And, Jerry, I know you are as well on your end, to start looking for places that we might consider getting back in now that the 26-point advance is over and so on. So we'll put that together. I also want to see if there's any questions that any of you might have, those of you that have come today, and we appreciate you coming to check out what we're doing. Everybody wants to get better at trading because you all know by now, if you've been watching our product, our work, that the markets are certainly not random. What possible kind of guess could you make? And this is not that unusual. The only thing unusual about the gold trade was the way that we forecasted it. Many of our trades would normally say something like, hey, we think the market's going to bottom at or near 1100 on the September 10th or 11th, and then it's going to advance to 1123.70. That's one way of doing it. But we have another way to forecast, which was that we didn't have a price for where it was going to be on September 11th, but we knew it was going to advance 23 points or 26 points off of that. How could you possibly consider any of that just a good guess? You've got the date, the date and that the fact that it's going to be a low, not a high, and then the fact that it's going to rally, it's going to be a fast rally, and that it's going to go to exactly this certain number of points and so on. Obviously, the markets are not random. So all of us want to get better, I know you do, at trading because the markets aren't random. They're not trying to take your money literally, and they're not even trying to give you money. The question is what do you understand, and can you employ that understanding in the market? And so the teamwork that we make with our clients and our customers is that we have a certain level of understanding of what the markets are most likely going to do to a great specificity. And we join up with you. You become a client of ours. We become a partner in a sense with you. And we show you how to use those forecasts to take advantage of these moves that are certainly just waiting to be taken advantage of. Again, the market's not trying to actually hurt you, and it's also not trying to help you. It's neutral. It doesn't care whether you own it or not. But having said that, it sure acts like it doesn't want you to get money out of it, doesn't it? It sure does do that. But once you have a very high probability of a very specific thing that is very likely to happen, and the time, the when, where, and how that's going to happen, your odds of being correct for at least a portion of that move, if not all of it, go through the roof. And our clients have found that out. That's why we've been here for 15 years. We have clients all over the United States and all over the country that are using this high level of methodology to really improve their own trading, to be able to trade up at the level of a Michael Jordan, so to speak, so that they can practice at much higher levels. And that's what this product allows you to do. And then if you need help in employing the forecasts in your work, Jerry, who is on with us today, helps people to utilize it because he's actually been there. There's quite a bit of difference between somebody who's never made or lost $10,000 in their life in the market and maybe running a business that markets, market information or a trading methodology, and somebody who's really been in the market in, 6- and 7-figure stuff. And that's what you're getting with Jerry, is it's the real deal. And you can't fake the real deal. It just can't be done. It's either real or it isn't. And so our clients get a chance to talk both to myself and to him, but he's made a bigger difference to our clients than I've been able to. And so I would encourage you, if you do sign up for a free trial, which you can do by going to pagetrader.com, just call us toll free. They'll put you in a 2-week trial. You can start taking advantage of some of these trades, or just watching them and seeing, if this works for you, if this does look like this is something you could take advantage of. Many, many happy traders are taking advantage of this. Jerry, do you have anything else that you'd like to add, or any final thoughts for today? And then I'm going to take some questions.
Yeah, no, just anybody who, as David said, get into a trial with us, and then once I know that you're in a trial, I'll obviously reach out to you so we can make a connection and see what assistance I can be. And if you are already in a trial, or even if you're a subscriber listening in today and want to reach out to me, I welcome you to do that. You can reach me at 702-334-1503, and I look forward to talking to anybody who gives me a buzz.
Okay, great. Thank you very much, Jerry. Quick questions here. Hamilton Lewis is with us. Hey, Hamilton, I'm looking forward to seeing you soon. He says, David, great call on gold and crude. Was yesterday's 44 stop a square? I'll have to check that, but he's referring to a long trade that we had in crude where we had taken off an initial 40 cents or so, 38 cents of gain, and the market pulled back much deeper and stopped than we thought it would, and it actually stopped our position out for roughly a break even, and that's why we use stops. And that made us believe that crude was likely going to go higher. That kind of flush out often occurs before a larger move. But the forecast was the market was going to go up about 70 cents from our entry and go do $45.20. Obviously, if you look at crude today, they certainly have done that and plenty more. He also says the time and price on gold call was remarkable. Thank you. A combination on reflected wave and square. Yes, exactly. And he says, wow. Thank you very much, Hamilton. Then Ed is with us here. Good morning, Ed. And he says, David, any indication on the S&P for pullback to 1970 or close prior to taking out the highs? I don't know for sure. I have to look back at the intraday now because I've been on the radio for 45 minutes with Dwayne, and now we're finishing this up. I haven't seen the market in the last hour, so I'm going to have to get back to that. But I do want to say we are still expecting higher prices. That is what we believe is going to happen. That's what we have forecast. I mean, anybody at this point has booked some gains in this call, and you're not going to hopefully be giving back too much of those. But as I was pointing out in crude, there are going to be an occasional, this is the S&P right now, there's going to be an occasional time where the market may actually complete a forecast that we give, but we may get stopped out before that happens. And it doesn't happen too often, but it does happen from time to time. So, and we try to make it so that when we do get stopped out, we're already at a break even or possibly a gain if we can. But we don't trade for a break even. That's a loser's game. Remember that. That's what you see a lot of methods do out there. They get, the market moves a few ticks in their favor, they quickly rush up their stop to a break even. Well, guess what? A break even to you, to your position, isn't necessarily the right place for your stop to be. It's just a place that would break you even. So it really doesn't make any sense to do that. See, this goes back to the hard decision, easy decision thing. That's an easy decision. Oh, I have 2 ticks in a trade. Well, I'm going to rush my stop up to break even so that I don't have any loss. Well, then you're going to get a break even. You're trading for a break even. That's what you're doing. You're not trading for a gain. You're trading for a break even because that's what's most important to you. If a gain was most important to you, you'd be trading for the gain. But it's not. Your most important thing is to break even. And so we don't rush our stop up to break even. We try to place it in a spot that the market wouldn't go under a set of conditions that we currently have in the market, whatever that is. And then we start moving it up to keep it the hell out of the way of the market while the market's on its way to completing numbers. The reason people do the rush up to break even thing is because they don't have any idea of where the market is going. And I suppose that might be the best solution for people who have no idea where the market's going. My suggestion would be don't trade until you do have a really good idea of where the market's going. In order to solve the problem that you don't know where the market's going, and therefore you have to rush a stop up to break even, in order to solve that by rushing it up, you basically are just wasting time in the market and commissions and so on. Why not get to a point where either you yourself have defined for yourself a very high probability thing, or use our product, which gives you exactly that. It tells you exactly where the market's going to go, when it's going to get there. And now you don't have to rush your stop up to a break even. And the 1 or 2 times in a number of trades that the market comes back and stops you out, that is wonderfully easy to take in consideration of all the other gains that the market gives us. So we're willing to do that. Sometimes we go 10 and 20 trades without that happening. We really do. And the market just runs to the numbers and so on. Now, again, I want to say past performance is no indication of future performance. We believe our past performance doesn't have any proof of future performance either. But we believe that there are principles that the market operates off of, that we're operating off of as well, that are going to continue to allow us to call very accurate market movements into the future. And why not have that information? Or is it better to not have that information? What is better, to have that information or to not? And we think it's much better to have that information, and obviously it is. It's much better to know with great certainty that a certain thing's going to happen than it is to be uncertain and therefore have to do all these things like rushing your stop up to a break even. Once you get past all that, you'll find that trading is much easier because the market is not out to screw you. But you have to be at a certain level in order to get the market to pay you. That's what the truth of the thing is. The market doesn't really care whether you own it or not. But you have to be at a certain level, psychologically, certainly, and you have to have a certain understanding of what the market's most likely to do in order to really have success in this. You can't guess. Guessing doesn't work. And many traders, or even what people might consider themselves investors, are guessing. Well, we don't want to guess, and we'd like the whole world to know that it's not necessary to do that guessing if you can be patient enough to follow what we're doing here and tie that in with your own work. And you'll find that the connection between your own understanding of what the market's likely to do and our work, which will often tell you that it is likely to do that or even beyond, will supercharge your trading, and you'll be in a different position, and you won't be thinking of the market as something that's out to get you. It's not out to get you, but it will get you if you don't have a good understanding of what it's likely to do. That's when it's going to get you. So keep that in mind. I would like to thank all of you. Jerry, thanks for coming on today. I'd like to thank all of you for spending some time with us here today. We're on every day with John Ransom. You can come back and check out what we're doing. Our company is pagetrader.com, Pagetrader. You can go over there and you can call us toll free, 888-231-4702, and we'll put you in a free trial for 2 weeks. You can check out all the trades that we're taking, and then you can make your mind up if this is something that will work for you. And again, I'd like to thank all of you for your continued support. Just coming here means a lot to us, and we'll see you here tomorrow for our next edition of the Market Movements in Advance on Ransom Notes. See you then. Thanks again.